Most traders are drowning in complex indicators, spending hours analyzing charts, only to watch their accounts shrink day after day. Here's the thing that might surprise you. What if I told you there's a strategy so simple that it only requires one candle to potentially generate consistent profits? This works across all markets, and most importantly, it actually works. And to prove that this strategy is consistently profitable, I'll show you some real trade examples on popular markets like these three. I'm talking about the 4-hour range strategy, and today I'm going to reveal the exact 3-step process that can transform your scalping results. But here's where it gets really exciting. At the end of this video, I'll share a secret technique that will make this strategy even more profitable than you can imagine. So what exactly is this strategy? The foundation is incredibly simple. We're using what's called the 4-hour range. This is simply the distance between the high and low of the very first 4-hour candle that forms during the trading day. When we're scalping on lower time frames, like the 5-minute chart, this 4-hour range becomes our roadmap for finding high probability entry points throughout the entire session. The beauty of this approach is that while other traders are getting lost in indicator soup, you'll have a clear, rule-based system that tells you exactly when to enter and when to stay out. Professional traders have been using range-based strategies for decades because they understand something crucial. Markets spend most of their time consolidating within defined boundaries. Now, let me walk you through the exact 3-step process that makes this strategy work like clockwork. First, open TradingView. If you don't have it yet, I'll leave a link in the description. Choose any chart depending on the asset you're planning to trade. For this demonstration, I'm using the Bitcoin chart, but remember, this strategy works across all markets. Next, make sure your time frame is set to 4 hours. Go to the time zone setting in the bottom right corner of your chart and select New York time. Now locate the first 4-hour candle that formed on today's date. In this example, the first 4-hour candle that formed today is right here. Simply draw a line at the high and low of that candle and extend both lines to the end of the trading day. That becomes your 4-hour range for the entire session. One critical point to remember: make sure that first 4-hour candle has fully closed before marking your range. If the candle is still forming, you need to wait for it to completely close first. Once your 4-hour range is identified, we move on to step 2. Switch down to the 5-minute time frame to hunt for our scalping setups. The pattern we're looking for is beautifully simple yet incredibly effective. We need the 5-minute candle to close outside of our range, either above the range high or below the range low. The candle body must fully close outside the range. Wicks alone don't count, no matter how long they are. After this breakout occurs, price needs to re-enter and close back inside the range again. This sequence must happen within the same trading day as the 4-hour range we marked. Once that sequence plays out, we move to step 3, which is our entry. In our example, since price broke below the range low and then re-entered, that generates a long signal. The logic is simple but powerful. The market tested lower levels, found no interest from sellers, and is now likely to bounce back toward the opposite side of our range. For the stop loss, we place it at the exact low of the breakout move. For the take profit, we aim for at least 2 times our stop loss size. This 2-to-1 risk to reward ratio is what keeps us profitable even when we're wrong more often than we're right. Watch what happens here. Price builds momentum upward and directly hits our profit target. Now let me show you how this strategy performs across different markets with actual trade examples that prove this isn't just theory. Let's start with crypto. We already have our 4-hour range marked using New York time zone. The first 4-hour candle established our boundaries, and now we're hunting for opportunities on the 5-minute chart. Here's our setup. The 5-minute candle broke above the range high, then closed back inside. This generates a short signal. Stop loss goes at the range high, take profit at 2 times our risk. Price moves down and hits our profit target, delivering a clean 2R gain. Next, price dropped and broke below the range low. After that move, it re-entered inside the range, giving us a long setup. Stop loss at the range low, take profit at 2 times risk. Once again, price hits the target, securing another 2R profit. Moving to this other market, we have our 4-hour range already established for the trading session. Price broke below the range low and then closed back inside, creating a valid long setup. Here's where we encounter one of the challenges that can arise with this strategy. The breakout was quite large, making it impractical to place our stop loss at the actual lows. Instead, we can use the nearest key level. In this case, there was an order block nearby which provides a logical stop-loss location. By the way, the secret trick I will share at the end of the video will also solve this problem. We set our take profit at 2 times risk, and price moves up to hit our target, securing a 2R gain. This demonstrates the flexibility needed when applying systematic strategies to real market conditions. Shortly after, price broke above the range high but closed back inside, generating a short entry. Stop loss at the highs, take profit at 2 times risk. This time, price hit our stop loss for a 1R loss. The session continued with price trading above the range for an extended period before finally closing back inside, giving us another short setup. Since the breakout was too large for a conventional stop loss, we used a nearby resistance level instead. Take profit remained at 2 times risk, and price hit our target for another 2R gain. Moving to the following trade, we establish a new 4-hour range. Price broke below the range low, then re-entered, generating a long setup. Stop loss at the lows, take profit at 2 times risk. Price rallied and hit our target for a 2R gain. The pattern repeated. Price re-entered from the range high, giving us a short setup. Stop loss at the highs, take profit at 2 times risk. Another successful trade hitting our profit target for a 2R gain. Price then closed slightly above the range high and subsequently closed back inside, creating another short entry. Stop loss at the highs, take profit at 2 times risk. Once more, price hit our target for a 2R gain. After some consolidation, price provided another short setup following the same pattern. This time, however, price hit our stop loss for a 1R loss. On the third trading day, price broke above the range high and re-entered, generating a short entry. Stop loss at the highs, take profit at 2 times risk. Unfortunately, price hit our stop loss for a 1R loss. Another short setup developed shortly after, but again resulted in a 1R loss when price hit our stop loss. However, when price re-entered the range once more, we took another short position with the same parameters. This time, price cooperated and hit our target for a 2R gain. The results showed 10 trades with 6 wins and 4 losses, generating a total of 8R gain. That equals a 60% win rate with solid returns, demonstrating the strategy's effectiveness across different market conditions. But with the secret trick at the end of the video, it will improve even more. But first, I want to thank our amazing community. We selected the user who helped another community member, and we're gifting them 1 free month of Flux charts, because that's how a community should work, by helping each other out. Please reach out to our email to claim your free subscription. Now, if you haven't heard about Flux charts yet, this is the platform I use every single day for my trades. It completely changed how I trade. Flux can run screeners on up to 15 tickers and timeframes at once, so instead of flipping through charts, it tells me exactly where my setups are happening. They have backtesting tools to build custom strategies and test them against years of market data in seconds, so you know if a strategy works before risking any money. Here's the best part, 90% of their indicators are completely free. Plus, you can use Flux charts even with the free version of TradingView, which is huge because you can use multiple indicators simultaneously, avoiding TradingView's 2 indicator limit. They also host daily live trading classes teaching strategies, risk management, and trading mindset. Can't join live? They have a full library of recordings. Click the link in my description and use this code to discover the fantastic promotion I got for our community. Alright, let's get back to the video. Let's examine how this strategy performs in the Forex market using this pair. We have our 4-hour range marked for the current trading session. Price closed above the range high and then reversed back inside, creating a short setup. Stop loss positioned at the highs, take profit at 2 times risk. This trade hit our stop loss for a 1R loss. However, price quickly re-entered the range again, providing another short opportunity. Stop loss at the highs, take profit at 2 times risk. This time, price moved in our favor and hit the take profit target for a 2R gain. On the same trading day, price generated another short setup following the exact same pattern. Stop loss at the highs, take profit at 2 times risk. Price continued downward and hit our profit target for another 2R gain. Moving to the next trading day with a fresh 4-hour range established, price quickly provided a long setup. Stop loss at the lows, take profit at 2 times risk. Price moved upward and hit our target for a 2R gain. Later in the session, price gave us another long setup with the same parameters. Stop loss at the lows, take profit at 2 times risk. Again, price hit our target for another 2R gain. After that sequence, price broke above the range and remained there without re-entering until the end of the session, so no additional setups were available. The following day, we marked our new 4-hour range. Price broke above the range high and stayed elevated without re-entering, which meant no valid setups occurred for that particular trading session. The Forex market results were impressive. Out of 5 trades, the strategy produced 4 wins and only 1 loss, with a total gain of 7R. That represents an 80% win rate on the Forex market, which demonstrates excellent consistency. These examples prove that this simple 4-hour range strategy works exceptionally well across different markets, even when using just the basic version of the system. Now we reach the truly exciting part, the secret technique I promise that will transform this already powerful strategy into something extraordinary. The game changer is introducing the volume-weighted average price, or VWAP for short. The VWAP enhancement solves 2 critical problems that can limit the basic strategy. First, it helps us place much better stop losses. Second, it allows us to capture massive profits even when the price moves far outside our initial range. Let me show you exactly how this works on a live chart. Here, price broke above the range high and then closed back inside, generating our short signal. But notice what happens when we apply the basic strategy. The stop loss would be so tight that it makes the trade extremely vulnerable to market noise. Additionally, the resulting take profit would be so small that it's barely worth the effort. Here's where the VWAP helps us. Instead of placing our stop loss just above the recent highs or lows, we position it just above the nearest VWAP standard deviation. Our take profit target becomes the main VWAP deviation line. This approach creates a much more robust trade setup. The position is no longer subject to minor fluctuations, and it has a significantly higher success rate. On sideways trading days like this one, price often gravitates toward the main VWAP deviation, as if the market is confirming that it doesn't currently have the strength to make a decisive directional move. The basic strategy works beautifully on sideways days, but can struggle during strong trending conditions. This is where the VWAP enhancement becomes truly powerful, allowing us to identify trends early and profit enormously from them. Here's the key insight. From the moment price exceeds the previous high by more than 1% or drops the same amount from the low, we're no longer looking at a simple range reversal play. Instead of just waiting for that re-entry to trade contrarian, you have another option that can produce massive profits. You wait for price to touch the first deviation of the VWAP. This contact confirms that the breakout isn't just some fake-out nonsense, but a real, sustained directional move. And what do you do at that moment? You open a trend-following trade without a traditional take-profit target. That's right, you're riding this move until the end of the trading session. Your stop loss is only 0.5%, just 0.5%. We're not taking crazy risks here. We're being intelligent about it, keeping our risk minimal relative to the typical size of our previous trades. Watch what happens in this Bitcoin example. Price absolutely explodes upwards, touching that VWAP deviation level, and the result is sensational profit that dwarfs anything the basic strategy could capture. Let's examine another example on USD/JPY. In this case, the new high created is quite substantial compared to the price range of the first 4-hour candle, which would create the problem of an excessively wide stop loss and a take profit that would be extremely difficult to reach. We solve this by placing our stop loss just above the VWAP deviation level. We let the trade develop, and the result speaks for itself. Another significant winner that the basic strategy simply couldn't have captured. Now let's look at one final example using crude oil futures. Price breaks below the range low, then bounces back inside. That's our long entry signal. Stop loss at the breakdown low, take profit at 2 times risk. Price starts building upward momentum and directly hits our profit target for a solid 2R gain. Price breaks above the range, re-enters. We open a short position with stop loss at the recent swing high and take profit at 2 times. Another profitable trade. It breaks above again, re-enters. We open a long position with the same parameters. This trade hits our stop loss for a 1R loss. Then something interesting happens. The price exits the range significantly, more than 1%. Following our VWAP enhancement rules, we open a long position with our stop loss at just 0.5% and let the take profit run freely until it touches the VWAP deviation. The result? Huge profit that completely changes the day's outcome. Finally, here's the moment you've been waiting for, the comprehensive backtest results. To validate this strategy properly, I created dedicated code in PineScript v6 for TradingView that replicates the behavior of the strategy with remarkable accuracy. I'll leave this script in the description for you to test yourself. The results are absolutely incredible. Over 2 months of live executions, the strategy achieved a 65% win rate with an impressive profit factor of 2.3. These numbers speak for themselves and demonstrate the real-world viability of this approach. Through extensive backtesting, it became crystal clear that this strategy absolutely dominates during sideways market movements and clear upward trends, with moderate controlled volatility. However, like any trading system worth using, it does face challenges during strongly bearish conditions or unexpected volatility spikes. This is completely normal. No strategy wins 100% of the time, and any system that claims otherwise should be viewed with extreme skepticism. Thanks for watching, and I'll see you guys next time.